So how big of a market and what opportunities do you see in this space?
Well, thanks for having me on today. We're excited to talk about Nephila climate. The market today is relatively small. It's billions of dollars, not tens or hundreds of billions. But the exposure is obviously much larger. You think about water, you think about temperature, and the ways in which those risks flow through companies. That's obviously been a clear and growing issue in financial markets.
Now, you're the first sort of dedicated investment manager dedicated to reinsurance and weather-related risk. How are you packaging that?
It really depends upon what the buyer most needs. So in some cases, people are looking for an insurance policy. In some cases, insurance companies are thinking about reinsurance for policies that they've issued. And in some cases, companies simply want some sort of swap or option that's customized to the specific exposure that they have.
Well, so I suppose what I mean is there are other insurers out there and reinsurers. What makes Nephila different?
Really our capital base. So rather than having a public equity capital base, we are an asset manager. So we have about $11 billion of pension fund assets. And those pension funds are really seeking a return that's not correlated to other financial markets.
How much demand is out there? What are you hearing from clients?
On the investor side, there's a lot of demand for something that has some positive return and isn't associated with all of the other market variables. On the buyer side, one of the reasons we wanted to announce this division and not just have an internal team as it has been in the past is that in many cases, companies, governments, municipalities just aren't aware that these tools exist. So there's a lot of demand globally, but in many sectors, companies simply aren't using these sorts of tools because first they have to articulate the risk before they can transfer it.
What are the risks for you? Why are you the first to do this?
We're the first to do it because we have a history of trying to solve larger problems in risk markets. So if you rewind 20 years when we started, that was hurricane and earthquake protection in Florida and California. The insurance industry just didn't have enough capital for those peak risks. And because we have that experience and those relationships, companies also come to us looking for solutions for these other related problems. We feel like the weather market is in a similar position to that reinsurance investment market 20 years ago. And because we have a large portfolio of risk, we can hold that risk better than those companies can.